Welcome to Study Session 2, Costing Concept. Introduction. This lecture introduces you to important costing concepts. It includes installation of costing system and definition of relevant costing terminologies used in management accounting. However, basic classification of costing system have been identified and explained in detail for your best understanding on this concept. Objective. At the end of this lecture, you should be able to explain the various costing concepts, basic classification of costs, and other relevant costing terminologies. You should also be familiar with necessary departmentalization or component of installing good costing system in any given organization. Installation of costing system. A good costing system is the key point governing the mechanism of an enterprise in the field of cost control, ascertainment of profitability, and managerial decision making. Installation of a cost system is not an expense but an investment, as the rewards are much greater than the expenses incurred. The cost system is for the business and not the business for a system of costs. Therefore, the system has to be designed so as to meet the specific needs of the enterprise. The general considerations to be observed in installing a cost system are as follows. The objective. Whether the objective of installing the cost system is limited to a specific area, for example, material management, or fixing selling price, or to arrive at a certain managerial decision, or the concept is to install the system for covering all the aspects of cost affecting the business. The approach to install the system would be dependent on its objectives. The area of operation. Having decided the objective, the areas of operation of the system are to be studied by which the management can be best benefited. If production is slack, attention will be paid to increase it. If production is good but the sales are receding, study will be made to increase the sales and action taken according to the results of study and analysis. Such areas which require immediate attention are to be carved out on priority basis to be handled by the cost system. Products. The nature of product determines the method of costing to be applied. If the material content of the product is more valuable, the material cost records need to be kept in comparatively more elaborate manner so as to make material cost control effective. Same is the position with regard to labor and overhead. The organization structure of the business. No system of cost installation will succeed until the organization structure of the business is taken into account. Take two. Until the organization structure of the business is taken into account. The organizational part would help to determine the scope of working and improvement. The functional divisions of an undertaking based on cost are manufacturing, administration, and selling and distribution. A study of the present working of the different departments is necessary to suggest improvements. The conception and reception of the idea. The idea of the installation of the cost system is to be placed before the staff and the workers in a manner that is well received and not objected to on flimsy grounds. The success of the system will depend on the cooperation of the persons engaged in the enterprise, and the cooperation will be forthcoming only if the idea and plans are well conceived and received. The benefits of introducing the system to all the sections should be well explained. Collection of data and prompt information. The cost data works as a base for decision making. There should be a proper system for the collection of the required cost data and information promptly. There should be a system to verify the correctness of the data supplied. Otherwise, the conclusions drawn will be wrong and the time spent on working would go to waste. Cost records and cost books. The maintenance of cost records and cost books depend on the size and nature of the business. The manner in which financial accounts could be interlocked into an integral accounting system has to be studied and worked out. Decision has to be taken if two separate set of books, one for financial accounts and the other for cost accounts, have to be maintained, and thereafter the results are to be reconciled. Proper books and records are to be kept and maintained to meet the requirements of either of the two situations mentioned above. Control system for the elements of cost. System would have to be devised for recording and controlling costs of materials, labor and overhead in accordance with the costing principles and procedures. Type and method of costing. The choice of method of costing will depend on the nature of production, for example, job or process costing. For cost control, standard costing along with budgetary control may have to be selected and applied. Similarly, for decision making, marginal and differential costing techniques may be found useful. Preparations for the application of the particular method and technique type should be made initially. Responsibility accounting. Responsibility accounting is a technique of cost control by delegating. It has to be judged whether a particular official who has been assigned a particular function has implemented the same or not within the time allotted to him. Implementation. The system should be simple and easy to operate. It should be flexible so that it may be expanded or contracted as necessary. The existing pattern should be disturbed only as little as may be considered desirable. The desired changes should be introduced gradually and not in haste. Confidence to be created in the minds of management and executives regarding the utility of the system so as to avoid unnecessary criticism. Basic cost concepts. Cost. Cost means the amount of expenditure incurred on a particular thing. It is a measurement in monetary terms of the amount of resources used for the purpose of production of goods or rendering services. Costing. Costing means the process of ascertainment of costs. Costing involves ascertaining or collecting costs, analyzing or clarifying costs into basic elements such as material, labor, expenses, and so on, and allocating total cost to a particular product, a contract, or a process. Cost accounting. Cost accounting is a term broader than costing. It covers costing plus the reporting and control of costs. Cost unit. While preparing cost accounts, it becomes necessary to select a unit with which expenditure may be identified. The quantity upon which costs can be conveniently allocated is known as unit of cost or cost unit. Unit selected should be unambiguous, simple, and commonly used. Following are the examples of units of cost. Brickworks per 1,000 bricks made. Textile mills per yard manufactured. Electrical companies per unit of electricity generated. Transport companies per passenger kilometer. Steel mills per ton of steel made. Cost center. This refers to one of the convenient units into which the whole factory or an organization has been appropriately divided for costing purposes. Each such unit consists of a department, a sub-department, or an item or equipment or machinery, and a person or a group of persons. Sometimes closely associated departments are combined together and considered as one unit for costing purposes. Cost centers may be classified as productive, unproductive, and mixed cost centers, personal and impersonal cost centers, and operational and process cost centers. Productive cost centers are those which are actually engaged in making products. Service or unproductive cost centers do not make the products but act as the essential aids for the productive centers. The example of such service centers are administration department, repairs and maintenance department, stores department. Mixed cost centers are those which are engaged sometimes in productive and other times on service works. Impersonal cost centers. Take 2. Impersonal cost center is one which consists of a department, a plant, or an item of equipment. A personal cost center consists of a person or a group of persons. In case a cost center consists of those machines or persons which carry out the same operation, it is termed as operation cost center. If a cost center consists of a continuous sequence of operations, it is called process cost center. Variable cost. The cost which varies directly in proportion with every increase or decrease in the volume of output or production is known as variable cost. Examples include wages of laborers, cost of direct material, and cost of direct expenses like power. Fixed cost. The cost which does not vary but remains constant within a given period of time and a range of activity in spite of the fluctuations in production is known as fixed cost. Examples include rents, rates, insurance charges, management salary. Semi-variable cost. The cost which does not vary proportionately but does remain stationary at all times is known as semi-variable cost. It can also be named as semi-fixed cost. Examples are depreciation and repairs. Direct costs. The expenses incurred on material and labor which are economically and easily traceable for a product, service or job are considered as direct costs. In the process of manufacturing or production of articles, materials are purchased, laborers are employed, and wages are paid to them. Certain other expenses are also incurred directly. All of these take on active and direct part in the manufacture of a particular commodity and hence are called direct costs. Indirect costs. The expenses incurred on those items which are not directly chargeable to production are known as indirect costs. For example, salaries of timekeepers, storekeepers, and foremen. Also, certain expenses incurred for running the administration are indirect costs. Decision-making costs and accounting costs. Decision-making costs are special purpose costs that are applicable only to the situation in which they are compiled. They have no universal application. They need not tie into routine financial accounts. They do not and should not conform to the accounting rules. Accounting costs are compiled primarily for financial statements. They have to be altered before they can be used for decision making. Moreover, they are historical costs and show what has happened under an existing set of circumstances. Decision-making costs are future costs. Relevant and irrelevant costs. Relevant costs are those which change managerial decision. Irrelevant costs are those which do not get affected by the decision. For example, if a manufacturer is planning to close down an unprofitable retail sales shop, this will affect the wages payable to the workers of a shop. This is relevant in this connection since they will disappear on closing down of a shop. But prepaid rent of a shop or uncovered costs of any equipment which will have to be scrapped are irrelevant costs which should be ignored. Shutdown costs. A manufacturer or an organization may have to suspend its operations for a period on account of some temporary difficulties. For example, shortage of raw material, non-availability of requisite labor, and so on. During this period, though no work is done, yet certain fixed costs such as rent and insurance of buildings, depreciation, maintenance, and so on for the entire plant will have to be incurred. Such costs of the idle plant are known as shutdown costs. Sunk costs. Sunk costs are historical or past costs. These are the costs which have been created by a decision that was made in the past and cannot be changed by any decision that will be made in the future. Investments in plant and machinery, buildings, and so on are examples of such costs. Since some costs cannot be since costs cannot be altered by decision made at a later stage, they are irrelevant for decision making. Controllable and uncontrollable costs. Controllable costs are those costs which can be influenced by a specific member of the undertaking. Those costs that cannot be influenced like these are termed as uncontrollable costs. The difference between controllable and uncontrollable costs is only in relation to a particular individual or level of management. The expenditure which is controlled by an individual may be uncontrollable by another individual. Avoidable, escapable costs and unavoidable, inescapable costs. Avoidable costs are those which will be eliminated if a segment of a business, for example, a product or department with which they are directly related, is discontinued. Unavoidable costs are those which will not be eliminated with the segment. Such costs are merely reallocated if the segment is discontinued. Certain costs are partly avoidable and partly unavoidable. For example, closing of one department of a store might result in decrease in delivery expenses, but not in their total elimination. It is to be noted that only avoidable costs are relevant for deciding whether to continue or eliminate a segment of a business. Imputed or hypothetical costs. These are costs which do not have take-two. These are costs which do not involve cash outlay. They are not included in cost accounts but are important for taking into consideration while making management decisions. Differentials, incremental or decrement costs. The difference in total cost between two alternatives is termed as differential cost. In case the choice of an alternative results in an increase, decrease in total cost, such increased or decreased costs are known as incremental or decremental costs. While assessing the profitability of a proposed change, the incremental costs are matched with incremental revenue. Out-of-pocket costs. Out-of-pocket cost means the present or future cash expenditure regarding a certain decision that will vary depending upon the nature of the decision made. Opportunity cost. This refers to an advantage in measurable terms that have foregone on account of not using the facilities in the manner originally planned. For example, If a building is proposed to be utilized for housing a new project plant, the likely revenue which the building could fetch if rented out is the opportunity cost, which should be taken into account while evaluating the profitability of the project. Traceable, untraceable, or common costs. The costs that can be easily identified with a department, process, or product are termed as traceable costs. The costs that cannot be so identified are termed as untraced or common costs. Common costs are those costs incurred collectively for a number of cost centers and are to be suitably apportioned for determining the cost of individual cost centers. Joint costs is a kind of common cost. When two or more products are produced out of one material or process, the cost of such material or process is called joint costs. Production cost. The cost of sequence of operations which begins with supplying materials, labor and services and ends with the primary packaging of the product. Thus, it includes the cost of direct material, direct labor, direct expenses, and factory overheads. Administration costs. The cost of formulating the policy, directing the organization, and controlling the operations of an undertaking which is not related directly to a production, selling, distribution, research, or development activity or function. Selling costs. It is the cost of creating and stimulating demand, sometimes termed as marketing, and of securing orders. Distribution costs. It is the cost of sequence of operation beginning with making the packed product available for dispatch and ending with making the reconditioned returned empty package, if any, available for use. Research costs. It is the cost of searching for new or improved products, new application of materials, or new or improved methods. Development costs. The cost of process which begins with the implementation of the decision to produce a new or improved product or employ a new or improved method and ends with the commencement of formal production of that product or by the method. Pre-production costs. The part of development cost incurred in making a trial production as preliminary to formal production is called pre-production costs. Conversion cost. The cost of transforming direct materials into finished products, excluding direct material cost, is known as conversion cost. It is usually taken as an aggregate of total cost of direct labor, direct expenses, and factory overheads. Other costing terminologies. Costing methods. The principles in every method of costing are the same, but the methods of analyzing and presenting the costs differ with the nature of business. These methods of costing include job costing, contract costing, batch costing, costing plus costing, process costing, operation costing, unit costing, service costing, departmental costing. Basically, there are only two types of costing, viz. Job costing and process costing. Other costing methods are variants of and or mix of these two methods. The system of job costing is used where production is not highly repetitive and consists of a distinct job, so that the material or labor cost can be identified by order number. Contract costing does not in principle differ from job costing. A contract is a big job, whereas a job is a small contract. The term is usually applied where large-scale contracts are carried out. Job or contract costing is also termed as terminal costing. In contracts, where in addition to costs, an agreed sum or percentage to cover overheads is paid to a contractor, The system is termed as cost plus costing. Basic costing method is employed where orders or jobs are arranged in different batches after taking into account the convenience of producing articles. This method is particularly suitable for general engineering factories which produce components in convenient economic batches and pharmaceutical industries. When a product passes through different stages, each distinct and well-defined, it is desired to know the cost of production at each stage in order to ascertain the same. Process costing is employed, under which a separate account is opened for each process. Operation costing is a further refinement of process costing. The system is employed in the industry in which mass or repetitive production is carried out. The procedure of costing is broadly the same as process costing, except that in this case, cost unit is in operation instead of a process. For example, the manufacturing of handles for bicycles involves a number of operations such as those of cutting steel sheets into proper strips, molding, machining, and finally polishing. The cost to complete these operations may be found out separately. Until costing allows ascertainment of cost per unit or output of production, it is used where the products can be expressed in identical quantitative units. Service costing is employed where expenses are incurred for provision of services such as those tendered by bus companies, electricity companies, or railway companies. The total expenses regarding operation are divided by the appropriate units. For example, in case of bus company, total number of passengers or kilometers, and cost per unit of service is calculated. Departmental costing is used where a factory is divided into a number of departments. Cost estimation and cost ascertainment. Cost estimation is the process of predetermining the cost of a certain product, job, or order. Cost ascertainment is the process of determining the cost on the basis of actual data. Hence, the computation of historical cost is cost ascertainment, while the computation of future cost is cost estimation. Cost allocation and cost apportionment. Cost allocation refers to the allotment of whole items of cost to cost centers or cost units, whereas cost apportionment is the allotment of proportion of items of cost to cost centers or cost units. Thus, the former involves the process of charging direct expenditure to cost centers or cost units, whereas the latter involves the process of charging indirect expenditure to cost centers or cost units. Cost reduction and cost control. Cost control is achieving the cost target as its objective, whereas cost reduction is directed to explore the possibilities of improving the targets. Thus, cost control ends when targets are achieved, whereas cost reduction has no visible end. It is a continuous process. Cost control aims at maintaining the costs in accordance with established standards, whereas cost reduction is concerned with reducing costs. It changes all standards and endeavors to improve them continuously. In case of cost control, emphasis is on past and present. In case of cost reduction, emphasis is on the present and future. Cost control is a preventive function, whereas cost reduction is a correlative function. It operates even when an efficient cost system exists. Costing techniques. Costing techniques are not independent methods of costing. Take two. Costing techniques are not independent methods of cost finding and basically techniques which can be used with any of the costing methods. Costing techniques include marginal costing, direct costing, assumption of full costing, and uniform costing. Marginal costing is a technique of costing in which allocation of expenditure to production is restricted to those expenses which arise as a result of production. For example, materials, labor, direct expenses, and variable overheads. Fixed overheads are excluded in cases where production varies because it may give misleading results. The technique is useful in manufacturing industries with varying levels of output. Direct costing is the practice of charging all direct costs to operations, processes, or products, and leaving all indirect costs to be written off against profit in the period in which they arise. The technique differs from marginal costing because some fixed costs can be considered as direct costs in appropriate circumstances. Absorption or full costing is the practice of charging all costs, both variable and fixed, to operations, products, or processes. Uniform costing is a technique where standardized principles and methods of costing accounting are employed by a number of different companies and firms. Standardization may extend to the methods of costing, accounting classification including codes, methods of defining costs and charging depreciation, methods of allocating or apportioning overheads to cost centers or cost units. The system thus facilitates inter-firm comparisons and establishment of realistic pricing policies. Costing systems. It is possible to ascertain the costs under each of the costing methods either by historical costing or standard costing. Historical costing can be post-costing or continuous costing. Post-costing means ascertainment of cost after the production is completed. This is done by analyzing the financial accounts at the end of a period in such a way as to disclose the cost of the units which have been produced. This system is used only for ascertaining the cost, but not useful for exercising any control over costs. In the case of continuous costing, cost is ascertained as soon as job is completed or even when the job is in progress. This is done usually before a job is over or product is made. In this process, actual expenditure on materials and wages and share of overheads are also estimated. Hence, the figure of costs ascertained in this course is not exact, but it has an advantage of providing cost information to the management promptly, thereby enabling it to take necessary corrective action in time. Standard costing is a system under which the cost of a product is determined in advance on certain predetermined standards. Summary: an effective costing system should consider relevant information about the organization. Important costing concepts you need to be familiar with include cost costing, cost accounting, cost unit, cost center, variable cost, fixed cost, semi-variable cost, direct cost, indirect cost, decision-making cost, and accounting cost, relevant and irrelevant cost, shut-down cost, sunk cost, controllable and uncontrollable cost, avoidable and unavoidable cost, production cost. The cost classification is a process of grouping costs according to their characteristics. Based on elements, cost is classified into direct cost and indirect cost. According to elements, cost is classified into materials, labor, and expenses overhead. According to functions, cost is classified into production cost or manufacturing cost, administration cost, selling cost, and distribution cost. According to the nature or behavior, cost can be classified into fixed costs, variable costs, semi-fixed or semi-variable costs. According to controllability, costs can be divided into controllable costs and uncontrollable costs. According to relevance, cost is classified into shut-down costs, sunk costs, opportunity costs, imputed costs, and so on. We have come to the end of study session 2. Thank you.